What is the most common type of correction, which often is the optimal time to buy with the lowest risk and the maximum upside, aka wave twos? Yes, we are punching home with Elliott wave analysis because the psychology of the market becomes very predictable once you can read the markets like a pro. I'm going to cover some fundamental key lessons with you today. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus on currencies, but now exclusive on crypto. Let's dive in. So the theory, all right, 4 types of ABC corrections, right? There's a few things we need to cover. I'm only going to cover one of them today, though. General characteristics of corrective. So we're talking about this bit here. This is a correction. So general characteristics. Wave 2s and wave 4s are correctives within 5 waves. So this wave down here, wave 2 and wave 4, are actually micro corrections within this impulsive wave. Very important to know, because sometimes you'll see these patterns unfold and you might be trying to buy at the top here, but you can wait for down here and you'll get some, especially micro caps, make a big difference. Corrections occur after a 5-wave sequence. So now we've seen a 1, 2, 3, 4, 5. We normally should anticipate a 3-wave correction. Corrective patterns unfold in at least 3 waves. So sometimes there's more, something called a complex correction, but we should always anticipate a minimum of 3 waves. Anything beyond 3 waves is a complex correction. Once the correction finishes, so once this finishes down here, a new 5-wave sequence should unfold. We anticipate a new 5-wave sequence. Very important. This gives us context. So one of my favorite corrections, I know it's cut off a little bit at the top here, but it says ABC correction type 1 simple ABC zigzag, right? So what this is, the correction begins following the completion of a 5-wave sequence. So let's just say we've got this completion of a 3, 4, and then a wave 5. We should anticipate a wave A. And a wave A can break down, believe it or not, into 5 or 3 waves. Now, what does that even mean? Well, this is what I mean. These waves here, this is 5 waves in this example. This is most common, 5 waves for a wave A, right? 5 waves for a wave A. That's why I've written a 5 of an A. 1, 2, 3, 4, 5 of an A. And when you see the first move down, often people confuse this with the full correction. But when it's impulsive in a 5-wave sequence, it's often just a wave A of a correction. Then a wave B should follow. A wave B, you hear me say, yep, a wave B. And it also breaks down to an A, B, C of a wave B. Okay, now I'm moving into a bit more advanced. If you haven't taken my free Elliott wave and Fibonacci masterclass, which I break this down, it's almost like the foundation of what we're talking about here. Take it, it's free, it breaks this down, but it gives you valuable information that gives you insight into these markets. And this is not only crypto, this applies to all markets, but especially crypto, incredibly well to crypto. Wave C often exceeds the extreme of wave A. So here's the extreme of wave A, and then wave C would often, this is most common, would break the extreme of wave A. And wave C breaks down into 5 waves, right? So it subdivides into 5 waves more often than not, and it's pretty clear. And then we should get a continuation of the trend. Now I'm going to use an example today is with Matic Polygon. Now it's not actually a wave ABC. The Polygon one actually does something called a running ABC correction, which doesn't exceed, but you'll see this pattern. But we should always anticipate an ABC zigzag because this is the most common. It's the most easiest to kind of project in advance. So now we're going to jump into a live chart. This is Polygon, right? Polygon, also known as Matic. Now the price has really surged since this data, right? But I bought Polygon. I'm not currently holding Polygon right now, but I bought my first Polygon back in, I think it was January. Was it January? Yeah, it was around January. And the price was around 0.026. So we had it at a really cheap price, right? And then I saw this nice 5-way sequence unfold here. And I took profits over here. And I took profits, pretty much exit the full position all the way up here. But my plan was to then re-enter at a wave 2. So this now, if we go back into what we saw earlier, is this here is like a wave 1. And that's how I saw it. Wave 1, perfect. And I took profits at the top of wave 1. Well, it was a wave 5 of wave 1, a massive move. It was like a 2,000%. It was up here like 40 cents. So it was around 2,000%, right? Which is around 20x. Very nice movement. Beautiful. right? And then it was forming this textbook A, A, and then we got this ABC, A, B, C over B. And I'm gonna actually take the data from here. I'm just gonna cut the data so we can pull it forward like this. And then was anticipating a wave C to break down like this, right? That's what I was anticipating. And to be honest, I was looking to do a futures contract on this. I didn't manage to get it in time though. Yeah, I was a bit annoyed. It's a bit annoyed, but it is what it is. Yeah, there's a few futures I was using Binance at the time. This was an issue, but keeping the main thing. This was what was looking like to be a wave two, but I was anticipating this to come down here to do a typical wave two, but it ended up doing something called running, a running ABC correction, where this low on a typical zigzag will get exceeded, but it didn't get exceeded. It kind of went a bit lower, and then it just took off. It just took off. And then when this price up here got taken out, then this confirms that this is, we wouldn't have known in advance. We wouldn't have known in advance. This confirms the wave two low. And then we can project in advance what the wave three is likely to be. All right, we can project it from here, 2.618 and 1.618. We got these two numbers. I'm going to double click. I'm just showing you this because it happens time and time again, and you can project it in advance, which is what I love to do. Not for the sake of it, but just because more often than not, it's like, this is, by the way, this type of ABC correction, it's not that common, but when it does happen, it's a very bullish sign. It's saying the buying is so strong that the C didn't even exceed the previous A, right? And we expect it to be very bullish. And then, so I was a bit annoyed that I didn't manage to buy back in. I was very annoyed, to be honest. I had to let it go though. You have to let it go, right? It is what it is, right? And then, boom, it just exploded. Did a nice little correction, and then it went all the way, just shot past. Like it just, jeez, just overextended. Now this is another good lesson. Even though this is the typical overextended wave three zone, it just smashed through it like it wasn't there. The timing of the market was correct. The announcements was correct, and it was just so that's why you should hold a particular part and then profits up here. This is way overextended. This is pure panic buying, right? And then it came back down almost as fast when that happens. Yeah, when you see panic buying like this, the corrections tend to be big, right? And then it just kind of corrected out, and now we are where we are, etc. So today's lesson was about the ABC zigzag correction. I think it was this one. I've got quite a few lessons for you. There we go. This one here. ABC zigzag. Watch out for it. Watch out for it. Because when it breaks down, especially when it breaks down into this part here, 1, 2, 3, 4, 5 of an A, B, C. This you can project in advance with pretty good probability. And this tends to be a really great buying opportunity. We saw it with Solana. This is exactly what we saw with Solana, in fact. In fact, let's use Solana as the example. That would have been a better example. Let's get rid of these drawings. And then let's just finish on Solana because I know I've got it open. Let's have a look. Solana. This is Matic Solana. Yeah, down here. Okay, this one was a textbook ABC. ABC zigzag. This A down here, just by a little bit got exceeded, but it did get exceeded. It's an A. We got a B. And this actually was it's an unusual 1, 2, 3, 4, 5 wave diagonal wave C. Again, it's a bullish sign that the upside movement following this should be very, very aggressive, which it ended up being. And we took that into account. And that was my video that I did. In fact, here's the video just beforehand. This is what we were anticipating, an ABC zigzag. And this is what I was basing my analysis on, or a big part of it, combined with Fibonacci ratios and combining the two. And then the price just exploded. Like it just exploded, right? And then it continued to go to like $260 from $26. But a key part of this, the method behind the madness, was this ABC correction in advance. So if you like today's video, like, subscribe, hit the bell notification. Do you like ABC zigzags? You should. Other people call it other things, but I like to keep the context in Elliott wave terms because it's simple, it's easy, you can replicate it, and around 50 to 70, 80% of the time, these patterns are very identifiable in advance. Quote of the day. All right, it has been my observation that most people get ahead during the time that others waste. Henry Ford. Henry Ford. So now it's about looking at charts. Look at charts. Can you spot these ABC corrections? Can you spot them? And then when you spot them, what happened next? Yeah, what's the most typical and common? And once you get used to this, because I was doing this for years and years and years with Forex. So when I started to apply it to crypto, I couldn't believe my eyes. I was like, wow, it applies even better to crypto than it does Forex, because it applies very well to Forex and stocks and commodities, but especially crypto. So take my free Elliott Wave and Fibonacci masterclass. I just break it down in a bit more depth. Today was a bit more advanced, to be honest, and the masterclass is actually more like the foundation, and then you can cover some other stuff that I have available for you, but you can check it out for yourself. All right, like, subscribe, hit the bell notification. Tomorrow, I think we're gonna start. Yes, I think tomorrow I'm gonna start covering some basics on Fibonacci, the ratios and price movements, which we can project in advance when we see a big move up. What is the typical price range that we should anticipate it to pull back to? And when it's over there, what's the next price range we should anticipate based on human psychology of buying and selling behavior? Well, that's what I'm going to cover in tomorrow's video, because I want to give you some gems, some lessons, so you can really prepare for this bull market, get your business plan in play, your exit strategy in play, your entry. So if we get a bigger dip, you can go, hey, that looks like a very clean ABC wave 2 zigzag pattern. And tomorrow, I'm going to cover the retracement zones that we want to be aware of. And when we combine those all together, it'll give you an edge on the market. Because remembering, we can only do probabilities and never certainties. All right, see you soon.